US CPI inflation that has fallen now to 2.5% and core inflation that's risen more than expected. So it's slightly above expectations, both on a year-on-year as well as on a month basis. But yes, even Asia is picking up from the US handover. You've got Japan, which is higher by almost 1,000 points, 3% higher.
You know, Aisha, global markets are not exactly, it's not easy to call the global market setup. What was the narrative, let's say, last week or late or 10 days ago? The narrative was that growth concerns have come back and that will have an impact on the global demand setup. That led to a sell-off in commodities. Today, markets have decided to look through the sticky inflation figure which has come out. Now, typically when you see markets are reacting to technicals and not event or news, but more of views, then it means that markets either are getting ready to turn volatile or we could be in for rather unpredictable days ahead. So you may not see big moves. I'm talking about equity markets here. You may not see big moves, but you may see market simply oscillating between a narrow band where each day the queue, they could be reacting to a different set of queue. So that is the confused state of mind we are in the global markets, and that is largely because of technical factors which are at play. Where I think the puzzle is that why are commodities selling off? Is this, like I always use the word, harbinger of more trouble coming in the second half? If yes, then that I think is the entire big moving part, which in a sense would be crucial. But for the moment, if I have to describe the global scenario, it is not news, it is views, it is more technicals, less momentum, more volatility, nothing big in terms of a trigger which could generate upside momentum. Similarly, nothing big which could really damage the current setup or the current framework of financial assets.
Okay, fair enough. That's how one should be looking at the global markets. By the way, incidentally, you've got the Nikkei, which has jumped about 3%. A lot of those tech stocks as well are rallying, so keep an eye out there. But that being said, yep, as we flagged off, nothing much to yesterday's trade as well. It was a flattish sort of day as we ended around 120 points lower for the frontline index, so sub the 25,000 mark, and for the Sensex as well, down 0.5%. It was pretty much neck to neck with the broader markets. If anything, a cut of nearly 1% coming in for the broader end of the market. And it was FMCG, that sector actually continued to buck the general trend, so that defensive trades standing out, while some of your high beta pockets like metals or energy, those were the biggest drags in trade, including of course that PSU pocket, which has been in the limelight on the downside for quite some time. So Nikunj, looking at the overall trader screen, do you think that it would be prudent to look at perhaps a mix of defensive trades like FMCG?
So, I was just thinking through it, that where we stand, and I was just referring to my notes in the morning, and I just would request the producer to just fire the 1 month chart of the Nifty. Any guesses what has happened in last 1 month?
Flat.
Exactly. My point is that in last 1 month, despite the fact that we've so much of global adjustment, chop and churn, we've just been on the right side of the news. The Nifty
actually
in
an
last
uptick
1
of
month,
almost about 800 points in the Nifty.
2-3% is not something which you would say could be called as very meaningful in a sense. You've been in and around 25,000. Let me put it this way. You had a new all-time high and you're simply consolidating. Now this is happening at a time when you have crude, which is on your side. This is happening at a time when foreign institutional investors have turned net buyers. And within the Nifty and within the market, consumer durables are coming up. FMCG, the defensive trade is back up. Select banks on hopes of an interest rate cut, and money is certainly moving out of lot of so-called over-owned, over-discussed, over-bloated PSU stocks. That's how I see the market in a sense, the setting on the table. So what do you do in this market? And typically, Aisha, when markets consolidate and when globally also things are slightly volatile, you may not see big gains. So I'm not saying that you've topped out for the year, but for the moment, you should not expect anything big on the upside and anything on the downside. And where I'm surprised is that everything is going our way. Crude, FI buying, interest rates, the global setup, and yet the Nifty is slightly looking jammed. So is this an indication that we are running out of momentum in the near term? The answer may well to be yes. And also one more point I think on crude, and I'll stick my neck out and say it, that this entire crude drop and long commodity producers trade, I think that is also getting over. Crude has bounced right back up, and I was doing some numbers over just reading through some reports in the morning. So what I have realized is that for real advantage to kick in, crude has to stay at 70. It may be touch and a go moment, you come from 75 to 68, 69, come back to 75. That's not going to do anything.
It has to be there for a sustained period.
Exactly, and markets have already factored in that crude is going to stay below 70. So that trade I think also will reverse now.
Yeah, absolutely. And I think part of it actually played out. I mean, in terms of crude sensitives, only paints are the one segment which held out yesterday in an otherwise falling market. Well, by the Nifty may be jammed, but the IPO market is surely not, Nikunj. Bajaj Housing, and what a bumper response. It's got the highest ever number of applications at almost 89 lakhs.
So I'm not surprised at all. And nobody is surprised because it was not like a large issue. It was less than $1 billion. It is coming from the house of Bajaj after 30 years. And I wouldn't use the word desperation, but the action in the IPO market is such that everybody in a sense now really wants to get into this IPO game where you put in an application, if you get lucky, you get the allotment, otherwise you get your money back. And when you get an allotment, I think it's going to be in bumper listing. So we won't get into where Bajaj Finance would list, that's a separate conversation. But what I would like to point out here, and this is something, our viewers, I would urge you to stay with us here. Bajaj Finance, in terms of the absolute numbers, has seen a participation of nearly 3 lakh crore. Now 3 lakh crore is the highest any IPO has got after COVID. But is this the highest any IPO has ever generated? No. Reliance Power at its peak in 2008 when it went public, it had IPO applications of about $10 billion. And I'm talking about 2008, ladies and gentlemen, we are in 2024. So when it comes to a real mania, right now I'm using the word excitement and desperation in the IPO market. But the real mania happens when you see an issue like Reliance Power getting that kind of a fat subscription for a company which was projected to make profits 3 years after listing. So just when we think that, okay, this is it for the IPO market, I think excesses have happened and they're far greater in the past in 2008. And when the demat accounts were less, the economy was different, the equity cult was not strong.
It was at the peak of 2008 bull run.
It
was at the peak of the frenzy in the market.
That is frenzy because if you compare the 2008 number of Reliance Power versus Bajaj Finance, inflation and base adjusted, the number is still small and lower. And B, Reliance Power was projected to make profits after 3 years. You were almost selling like a shell company that time, right? This is a profitable company growing at 25%. I mean, there is bang for buck here. But yeah, I mean, when the excitement is there, that's what happens.
Yeah, numbers can't be justified then. But let's.
If you like this video, then like, share and subscribe to ET Now.